again, hopefully Tattooed Chef is going to report some earnings or something here to cause some activity to go on. Have an interesting little article here that just popped up, and check this out. Fed officials thought Americans had trillions. Let me repeat. Fed officials thought Americans had trillions in excess savings, but new data shows they were wrong. So what happened? Due to significant increases in credit card usage, which I literally just dropped a video on credit card usage. We're back again. Yeah, we're back again for another Tattooed Chef whatever debacle is going to take place here, Jazz. I don't know, man. By the way, if you guys are piling in here, let me know if you think Tattooed Chef is going to break below $2 or stay above $2. Would like to get an idea. Let me know in the comments. Do you think Tattooed Chef is going to hit the $2 mark, or do you think it stays above 3, I should say? Want to know the comments. Right now the stock is down 1.3%, sitting at $3.34 right before earnings. But let me finish this article, guys, because literally I dropped a video on this topic today about credit card debt. And yeah, so the headline is Fed officials thought Americans had trillions in excess savings. New data shows they were wrong. So what happened? Due to significant increases in credit card usage and mortgage balances, American households increased their debt at the fastest rate in 15 years, which would be obviously 2008, the financial crisis, to 2007 time period. And the total debt increased by $351 billion for the period of July to September, the largest nominal quarterly increase since 2007. That must be a misprint. Since 2007, suggesting that the excess savings the Fed believed Americans possessed has already been spent. Interesting article, guys, as I literally just dropped the video on this, and this just popped out 2:46 p.m. today. I think I made my video at like 11, edited it, and popped it out by like 1, maybe 12:30ish. So how crazy is that? Like, we talk about the consumer is strong, the balance sheet is strong on the consumer, and then what ends up happening? The debt is skyrocketing to unseen levels. Well, I guess the levels we can compare it to is 2007, 2008, which we all know was a great year for a lot of individuals. And so it's just like the cycle repeating itself once again. So pretty interesting stuff. As you can see behind me, guys, we do have the 1-minute chart on TTCF, which, you know, it's going to be interesting. It's going to be interesting. So I apologize about yesterday's live stream, although I would say that yesterday's live stream was pretty informative, and I hope that it helped out at least a few individuals, as there were some really good questions asked in the live stream. And, you know, unfortunately, I think there's a lot of YouTubers misleading people that are interested in investing and using metrics that they should not be using, like price to sales and price to revenue. And I mean, those are like last things you really should be looking at. You know, I would much rather be looking at, you know, as crazy as it is, a PE ratio and a forward PE ratio, compare it to its peers, look at what their growth rates projected to be, and you could find out a lot just by doing that, guys. Like, you don't have to do all these DCF models. You don't have to do all this price to sale. When you're using price to sales, it's because the company doesn't have earnings, right? So you're like, how do I measure this company that has no earnings? Well, at that point in time, you probably do need to do some sort of DCF model, right? Because you have to project out earnings at some point, or at least some sort of cash flow at some point, because that's exactly what we're paying for, right? We're paying for the future cash flow of a company. So we kind of talked over that yesterday in the live stream. So hopefully people found some value in that. I know the title was probably misleading because we thought we were going to get Tattooed Chef earnings. Somebody did in the chat. What's up, Jeffrey, man? Long time no see, man. I don't see you anymore, brother. I hope all is well. Somebody in the chat did put that the earnings were coming out today. So I apologize for being a little early, but I read the report and it said it was going to come out before the 14th. and I assumed it was going to come out after hours. Not the case, but I got confirmation today through a couple of subscribers showing that they are going to report today after the bell. Who knows when after the bell, but as you can see behind me, we'll have the stock price up there. So we'll be able to see the volatility basically take place live with Tattooed Chef. Yeah, so consumer is not most likely not as strong as everybody assumed. While we get some time, why don't we take a look at the overall market here, and we'll go to the S&P 500. By the way, have you guys heard that a missile hit Poland? I think it was Poland. Did you guys catch that today? And they're trying to sort out exactly how this missile hit, who shot the missile. Was it Russia? Was it a misfire by Ukraine? So that's pretty interesting to come out of the woodwork here, and something to keep an eye on, ladies and gentlemen, as that can formulate into something pretty significant, most likely, depending on what happened. And if anybody has any information on that, absolutely drop it below. 2023 is where we move to the upside. We are focusing on this company while others tanked as well. It's been a while, bro. Oh, yeah, man. So, you know, basically with Tattooed Chef, you guys want to see margin expansion. We already got an idea what their earnings are going to be. The biggest reason why I'm following Tattooed Chef today is I want to see if they're growing their margins, if they're diluting their shares, you know, what their balance sheet looks like, and kind of gauge if they have some sort of visual to profitability here, right? I mean, like, when are they going to be profitable? Because it just seems like the only story that comes out with Tattooed Chef is a spending story of more products and M&A, and it's just, when are they just going to focus on the bread and butter of what's really selling for their business and start turning a profit for shareholders is the question I have, you know. And that, if I was on a phone conference with Tattooed Chef, that'd be the first thing I would ask. Like, listen, you guys have 50 products and your top 10% are your top sellers. Like, why don't you just focus on mastering those top products and start turning a profit before we exceed to anything else, right? You know, that's kind of just what my thought process is. And when you think about food companies in the past, right, you know, I guarantee, like, if you went back in the history of like Campbell's Soup, or you went back in the history of Hostess, or any of these kind of packaged food companies that you can kind of compare to, I guarantee they had 5 to 10 items that were their bread and butter that took off, and they built out from there, right? They built out from there. They built a good business off of those 10 products, and they started cash flowing. And then all of a sudden it was like they came up with new creative ideas, would test the market, see what happens. With Tattooed Chef, it's like all testing the market, and nothing is ever coming to fruition to where it's a true sustainable business. And that's what's getting scary. But we'll see what happens on this report. You know, I think probably the more important thing is going to be, what's the earnings call going to be about? You know, what are they really focused on? Because they seem to be a little bit all over the place. So we're closing the day right now at 398. You know, as you guys have been following, anybody that's been following the channel pretty consistently knows that I pretty much drew I drew a line in the sand around 4150 on the S&P 500, as that is basically where the downtrend is pretty much heading to a T. I can move myself back here a little bit so you guys can see. And we can see that we have a little bit more room to the upside, not much. And basically, I think we tap out right around here. We have the holiday season behind us. There's a lot of positive catalysts, I think, that are floating out there, whether you want to talk about CPI. Obviously, that looks like it's coming down. Inflation looks like it's getting under control. Some positive catalysts to go over. Walmart earnings were good. Home Depot earnings were good. You know, so there are some things where you can point as a bull and say, okay, looks like things are shifting around. But then you also have that bear case of, well, look at what happened with all the big tech earnings, right? What are they doing now? Big tech is laying everybody off. You know, we're still in a downtrend. Sentiment is still negative. there's so many bull bear cases, and I just don't look at any of that. I take a step back. I look at what the chart's telling me. The chart's telling me we're starting to approach an interesting level to where I need to keep an eye on it. Personally, I think 2023 is actually going to be a bad year for that first half of 2023, depending on how deep, or if you believe we're going to go into a recession. Everybody can have a different opinion. Nothing wrong with watching this channel and not agreeing with everything I say, but I tend to believe that we're going to head into some sort of recession in the next 6 to 9 months, and that lines up well with the second half of 2023. And with that being said, we'll have to see earnings contract, and we're starting to see earnings contract. So, most of that is already in place. Now the question becomes, how much is priced into the market? I think the only thing that's priced into the market right now, guys, is the fact that we have interest rates on the rise and we have to contract multiples, and that's what's been happening. People want to know, why isn't this a big crash? Why has it been a slow, steady bleed down? The reason why it's a slow, steady bleed down is that every time that there's an interest rate hike, we are getting repricing in assets. So when they raise 50 basis points, we're getting a reprice in assets. When we get a 75 basis point hike, we get a reprice in assets. What happened on the recent low? Right here, we had a rate hike, and then earnings started to disappoint and deteriorate. And so this is where, it made sense for me. This rally up recently, to me, is more of a short squeeze kind of rally. What ended up happening is we got a good CPI reading, and certain companies did report decent numbers. I wouldn't say they were phenomenal, but I would say reported decent numbers. I didn't go through Walmart's earnings, but from everything I've seen, pretty substantial beats, and they lowered their inventory, which was a big question mark for Walmart. And so, the market traded well off of that today, and giving back some of its gains early on. And I think that has to do with basically the missile that was fired today is questionable, and that's causing a little bit of anxiety within the market. So just my opinion on what's going on today. If there's anything I'm missing, guys, make sure that you drop it in the comments, because I don't always catch everything. So if there's anything that happened today that I might be missing, just let me know. But that's basically my thesis so far on exactly what's been going on in this market. So right now we are at 3:56. We're about 4 minutes away from the bell. And as we can see here, we'll just zoom in. What we've been getting is we've been getting a gap up in the market and a sell off. So it's been gapping up, selling off, gapping up, selling off. And we're completing a 6 count to the upside right now on a Tom DeMark's 9 count, which, if you guys can see this blue line right here, I'm going to try to zoom in so you can see it. Try to get on it. So there's this blue line right above here. It's very, very hard to see. Anyway, that is the 200-day moving average, and we are starting to approach it, and I think we will hit it and possibly retract back from those levels. If we break above it, I think it's going to be a kind of a squeeze, a break, and then we get that 4150 mark that I've talked about numerous times on the channel. From that 4150 mark, it's going to be really interesting to see what happens. Who really takes over? Is it going to be the Bulls or the Bears? Now, I want to remind you guys something here. While this rally has been absolutely vicious, and it's been a great rally, and if you went long on this rally, you're doing extremely well. I want you to understand something, that this rally was predicated off of major companies hitting 52-week lows, okay? So 52-week lows that got hit during this rally was Tesla, was Meta, was Google, was Amazon. There's a few others I'm missing here. Obviously, Apple got pretty darn close to a 52-week low. Bob, we can throw Bob in there, but there was a lot of stocks that hit 52-week lows in this time frame. And then what ended up happening is we had this massive rally back up. Why do we have that massive rally back up? Well, people that have been shorting have closed their shorts. How do they close their shorts? They buy back their shares, right? And then that causes a buying spree because you got the buy the dip crowd that forces this exacerbated move up. So we've had this vicious rally up, and the true test is going to be right around 4,100. So anybody that's a bull or wants to, or believes that there's going to be a reversal of conditions, that's kind of where you want to take a look is, do we break above 4150? And if we do, what are the catalysts that move us to the next level? Is it a change in leadership? Is it policy pivot? Is it stimulus? Is it what are the catalysts that are going to move us to the next leg up? Because personally, if you look at the market as a whole and you're taking in consideration that earnings are going to be retracting here, then this is starting to get expensive. So, and that's just my opinion, not all of stocks, but most of the stocks in the market are starting to get expensive. So, Charlie, I'm going to be buying Tyson Foods in the mid 50s. That's going to be my largest position going into next year. This is not a recommendation to buy stocks, guys. But anybody that's been following the channel, I believe that is going to be a flock to safety. I think there's a possible food shortage that could take place. I think that if war continues overseas, there's going to be high demand for the necessities of, and there goes the bell, the necessities of life. And therefore, something like Tyson Chicken, who's been around for an extended period of time and is a leader in their industry. Are we going to stop eating food anytime soon? Probably not. And so here we go. So right now I have up Tattooed Chef, the degenerate stock of the year. Is Tattooed Chef is that the degenerate stock of the year, or is there another stock that you guys think is worse? Is there another stock worse than Tattooed Chef that is talked about and is like fundamentally questionable? Is there any other stock that you guys I got nothing on my end. Let me see if we got any comments in here. Oh, Voyager Digital. Yeah, Voyager Digital. That was a good one. Yeah, that one was a good one. That was like, people were buying up Voyager Digital when it was like an absolute penny stock. Arthur, I'm not even gonna lie, man. I jumped on the Fubo train really quick. And yeah, not proud about that one. Baba was a big one, but Baba is actually legit fundamentally a good company. Tesla, yeah, but I'm talking about more high risk, like stocks that could go to zero. Is there any stocks out there? I think Voyager Digital was a good one. Who called out that Voyager Digital? Soren called out Voyager Digital. That's a good one, man. That might be the degenerate stock of the year right there. At least Tattooed Chef, you can physically, here's what I'll say. Okay, here's what I'll say. At least Tattooed Chef, you can physically go to the store and buy their product and they actually report earnings. Oh, Open Door. Open Door is a good one. But I will say Open Door, I know I got to do a Spotify analysis. Puzzle and I were going back and forth on stocks that we need to look at, and he brought up Spotify with the recent upgrades and them doing, I think you said 100 billion in 10 years annually. So, man, I'll definitely have to look into that one. But okay, so the best one so far, I think Voyager Digital's number one. I think Fubo's probably up there. Open Door is pretty trash. Now, here's the thing about Open Door. Why don't they just shift their model to residential rentals? Like, why just stop flipping and hold for long term and do residential rentals, right? I know they do that. I think they do that with some of their properties, but they're so focused on flipping because of the loan structure, I think, is what the big problem is with their business model. And I called them out on that when I went through their finances, guys. If anybody goes back and looks at the Open Door when they were trading at $14 and $15 a share, I said stay away from Open Door, or I said beware of Open Door is the title of the video. Beware of Open Door, because when you look down their finances, they have a tremendous amount of assets. Like, the quality of those assets, it's really hard to tell because like you don't have a book of business of like seeing where they're located, the condition of the properties. There's like a lot of unknowns with that. But then the thing is, like, there is a housing shortage, right? So like it's an interesting business model if they can figure out the debt, because the assets on their balance sheet are worth something, especially in a shortage of a housing market, right? You can almost see like a Toll Brothers coming in there and just scooping them up just to own the assets and be able to make them more luxurious or whatever. But ARK is definitely proof that was a disappointment. Although ARK has been rebounding like crazy. Let's run to Tattooed Chef's homepage here and see if they've dropped anything yet. See if they dropped a turd yet. No offense to anybody that owns them. So far, all I have up here is the late filing for Tattooed Chef. The only thing I have up is the late filing, so... Guys, how low is it going to go? I want to know what you guys think. How low is Tattooed Chef going to go? I have a price target of 192, I think it is. Let me... 194. Okay. I have a price target of 194 on Tattooed Chef. 194 price target, and I probably still wouldn't buy it at those levels, but just to give you guys a jumping off point. So I think if that's the case, I think there's an opportunity that it hits $2 today. I think there's an opportunity that it's hitting $2. By the way, I know whoever, guys, smash the thumbs up if you're in here. I know for a fact that there is a guy, he's probably in this chat room right now, who dislikes all my videos because I called him out on Tattooed Chef. I made a video and he said I was an idiot for saying it was going down to 16, and he trolls me. And it's at friggin', it's gonna, I don't hope it hits $2, but completely trolls me and says I have no clue what I'm talking about, and that I should stop, I should quit my YouTube channel. And more, it was obviously meaner than that, but I'm just kind of being nice. And I know he's probably in this room right now. He's probably already disliked this video, and anytime that I drop a video, he just, before anybody can even watch it, it already gets a thumbs down. So I know it's you. I know who you are. And that's fine. If you got no life, that's fine. But at least I'm bringing value to some other people, hopefully. So guys, I don't know. We might be here all night. We might be here all night waiting for them to report their earnings here. Do we have any questions? Oh, wait. Uh-oh. Uh-oh, we got price movement. We got price movement. Somebody just bought at $3.39. See that little... Let me see. Somebody just bought a share at $3.39 up here. Somebody's feeling frisky, guys. Somebody's feeling frisky. All right, so we got a couple people that think... Charlie thinks it's hitting 2. Remember Meat Scam buying it at $400 at the IPO? Yeah. I mean, could be the worst. As bad as like we talk about some of the YouTubers, I don't know if it gets any worse than that. Okay, in the comments, guys, who is the worst financial YouTuber that you think is out there? Like, that's legitimately, and what I mean by worst financial YouTuber, somebody who's like pumping stocks that have absolutely collapsed and doesn't own it. Because it's okay. Like, listen, there's going to be times when you pump something and yeah, so Mecca, Mecca's asking a good question. Are the numbers priced in already? Yeah, so the numbers are going to be priced in as far as revenue, right? The question becomes, did they dilute? What are their margins? What's their balance sheet look like? Those are kind of the numbers that we're not really getting a clear picture of. And then on top of it, you get guidance, right? 2023 guidance, which I said on the live stream last night, guys, that I think 2023 guidance is going to be flat. Okay? I think 2023 guidance is going to be flat. That's just me personally. So we got Lufufu by far is the worst. David Mitchell Jr., not sure. Jeremy for sure. Meet Kevin. Uncle Larry, Keenan, and Stockmo. Jeremy, number 2, is way behind. Jack Spencer. I've never heard of Jack Spencer. So most of these I've heard. I haven't heard of Jack Spencer. Chris Sane, honestly, that might be okay. Chris Sane is a liability. Like, actually, I would say Jeremy's a liability too, in a lot of sense. Not my place to say, because I don't want to focus on what other people are doing, but just want to get your guys' opinion on who you think the worst YouTubers are as far as kind of promoting stocks that just never seem to really work out. It's okay to have some that fail, but when you keep pumping garbage, like The Honest Company, like, can I be honest about The Honest Company? Like Tattooed Chef, Voyager, some bad ones out there, guys. Open Door, Affirm. You guys remember Affirm? Affirm was like the biggest blow up of financial services I've ever seen. What else do we got? I think Jeremy's better than Chris Sane. Yeah, I would say Jeremy is better than Chris Sane in the fact that Chris Sane's straight up gambling, guys. Okay, let me explain something. Chris Sane is just buying naked option calls or puts. He's buying naked options. Like, there's no, he's not straddling, like he's not playing earning. He's not, like, if you have an option strategy, I don't want to teach too much on options on here, because I don't want people to like take it to a whole nother level. But it looks like we got some buying on Tattooed Chef, guys. We're at $3.40. $3.40, Tattooed Chef. We're going in the right direction. Imagine if this thing goes back to friggin' $16 tonight. I'm probably gonna just shut off my live stream and not do any YouTube for about a year. But no, Chris Sane is more of a gambler. I think Jeremy really believes in some of these companies. I don't know. I have a suspicion. I'm not going to mention any names. I have a suspicion that these bigger YouTubers are getting paid to push these stocks, guys, to elevate the price for the companies to obviously take advantage of an elevated price. Okay. After this Voyager stuff and after this FTX, why is that not out of the realm? Why is that not out of the realm that this is a possibility? So, yeah, Chris Sane is just like, oh, the market's going up, buy calls. Well, that can reverse really quick, like depending on what your technicals are looking like. And to be honest with you, like, you want a catalyst. If you're going to buy naked calls and puts, you want some sort of catalyst, right? So like around earnings is a great time. Or if the stock sold off 25% and it's at a key level of support, might be a good time to do some sort of option strategies there. If it's getting ready for a breakout because it's hit a certain level 5 or 6 times and there's volume coming into the stock, might be an opportunity to use options for a breakout. That way there you're risking minimal capital to obviously take advantage of leverage and realize some gains on those moves. So that's what, or the real reason why we use options is really for hedging purposes, right? So like, let's say I have a let's say I have $100,000 portfolio and I'm up 25% on the year, and all of a sudden we're in a very volatile market. The Feds are going to be meeting. We have high inflation. The opportunity now is, okay, well, let me take a small percentage of my portfolio and possibly buy some SPY puts. That way there, if the market draws down and we have a 6 or 7% move because interest rates, they hiked the full point and earnings came out bad for a lot of companies. Now your beta is lower in your portfolio, right? So I understand using options for hedging, but to use it as a day-to-day trading strategy, you really, really have to know what you're doing. And I can tell you just by watching one of his videos, this guy has no clue what he is doing. And I don't know if he has professionals that answer the phone for him that actually know what he's doing, know what they're doing. But very dangerous game he's playing. Very dangerous game he's playing. And I don't know, a lot of them are playing dangerous games. Sorry, guys, about the delay on Tattooed Chef here. I'm not sure what's going on, but we're having some good conversations. So I want to answer some of these questions, but at the same time, I don't want this to be held against me. I see some good questions in here, but I don't want to... I don't know. Jeffrey, I don't know if I should answer that. Here's what I'll say, Jeffrey. Here's what I'll say about your comment. Okay? Jeffrey, I have proof that Tattooed Chef, I know Tattooed Chef reached out to other YouTubers about talking bad about their company. So why would they be reaching out to YouTubers unless if they were in the space for other reasons? If that makes any sense. Do you know let me know if you're following. So like if I was a publicly traded company and there was some Yahoo on YouTube with 50,000 subscribers talking trash about my company, would I really care that they're talking trash about my company? No, because my main focus is making sure that this company is profitable, making sure that, you know, I'm running it as lean and mean as possible, and I'm trying to get every competitive advantage as I possibly can. My focus should not be on what YouTubers talking trash about my company, because at the end of the day, they're probably going to eat their words, right? So, I mean, that's how I would look at it as a business owner. But the odd thing is, Tattooed Chef was contacting individuals talking about their company, okay? And I found that to be very suspicious. Why are they in the YouTube space? Well, they probably already had other connections there. All right, we're getting a sell-off on Tattooed Chef. See that red sell-off right there? We're actually still at 330. So Tattooed Chef sees positive EBITDA and cash flow by around mid 2024. So that means there's a full year, about a full year and a half until mid 2024. Third quarter revenues came in at 54.1. Loss per share is negative 46 cents per share. Guidance is at 235 to 245. Prior earnings were at 280 to 285. So when we really break that down, it's a negative $50 million earnings revision. So annual cost savings, they're looking for an annual cost savings of about $30 million by the year end of 2023. Full year revenue, we already went over. Okay, here we go, guys. Tattooed Chef intends to raise additional debt and equity cap in the near future. Do you know what that, guys, do you know what that means? I mean, you can try to make sense of what you think that might mean. Tattooed Chef intends to raise additional debt or equity cap in the near future. I want you to think about that. I don't want to talk trash about the company, but that's a pretty clear statement to me. So let's pull up the quarterly report. Should have dropped, and we'll go over it together, and we'll get a price target. As you all know, my price target's around $1.94. Basically, call it $2. Would I buy it at $2? No, I would not buy it at $2. My boy Ari is in the room. Ari, big shout out to Ari. He loves Tattooed Chef, as you can see in the comments, guys. Arthur, I do think there's a chance of that question. I'm not going to come out and say it. I think there is a very good chance that that did happen. Arthur, your question. They should be up already. Why am I getting, see, this is what's frustrating. TD Ameritrade's giving me their report before, TD Ameritrade's giving me their report before the actual company posts it on their site. So just to kind of recap here while we're waiting for it to show up on their site, Tattooed Chef Q3 EPS is -46, which is down from -10 cents. Year over year sales are 54 million, which is down from 58 million. So major problems, guys. When you're paying a premium for growth stocks, you cannot, especially if they are not free cash flowing, especially if they are negative operating margins, you have to have phenomenal top line growth. This, if Jeremy spins this, if anybody spins this in a good way, they don't know what they're talking about. Okay, this is awful. I'm just being honest with you guys. And as we can see, I think somebody said a lot of this is priced in. I would say a lot of it is priced in. It's on the website. Jeffrey says it's on the website. I just refreshed it. I'm getting the November 10th filing. Let me go to SEC filings. Jeffrey, I don't know why I'm not getting it. Let me go overview and then go back into quarterly results. There we go. All right, we're good. Or not. I got the earnings call up, but I'm not getting their financial reports. Hold on one second, guys. Quarterly results, Q3. This is some bullshit here because I'm not getting news release. All right, I guess that's what we're looking for. I don't know why they wouldn't just file it on the actual quarterly report. That's a little weird, but good call on the news release. Who was that? John Paul, appreciate you. All right, guys, let's see what the hell we're dealing with here. Net revenue was 54.1 million compared to 58. That's down. Gross loss of 3.9 million, or gross margin of -7.2% compared to gross profit of 5 million, or gross margin of 8.6. So margins going in the wrong direction once again. Net loss of $38.5 million, which now I'm wondering how much cash I'm wondering how much cash they have on their balance sheet, and that's probably why they have to raise capital here, guys. Adjusted EBITDA loss was of negative 25.5 million. And here we are. We are disappointed in our third quarter result, but remain committed to making Tattooed Chef a household name and generates value to our shareholders for years to come, said Sam Galletti. Awesome, Sam. That's great to see. Great to see. Net revenue decreased by 6.7%. Guys, this thing is about ready to shit the bed. To 54.1 million. Q3 2022 from 58. Yep, we got all that. Gross loss, we got all that. Net loss is 38, got all that. Negative 46 cents, got all that. Net loss of 8.2 million last year versus 10 cents, got that. Adjusted EBITDA loss was negative $25. They wish adjusted EBITDA was negative $25. Compared to adjusted EBITDA loss of 5 million, so they lost 5 times the amount from last quarter. Here's the problem, guys. At September 30th, 2020, cash was at 14.2 million, and the amount withdrawn on our line of credit was approximately 20 million. So they're already starting to draw lines of credit, which you don't like to see. Net cash used in operating activities was $17 million for the 3 months ended in September 20th or September 30th. 14.5 million primarily reflected of the purchase of the new manufacturing. So capital expenditures totaled 14.5 million, primarily reflecting the purchase of the new manufacturing storage equipment of our new 80,000 square foot manufacturing facility in New Mexico, which I thought they took care of. I thought that was already a done deal. So I'm wondering why that's coming up. Correct me if I'm wrong. Is that a done deal? Yeah. Margins are a problem for sure. As previously announced, the company's outlook is, yep, we got that. Gross margins are of 0 to negative 3%, guys. That's gross margins. I mean, when are they going to actually have margins? You can't invest in a company that doesn't have margins. Guys, I want you to look at this. Let me make sure you can see this. I got it over here. Okay. Cash and cash equivalents from $92 million down to $14 million. Accounts receivable is less. Inventory is up. Okay. These are not good. These are not good things when you think out further, right? You want to see inventory levels under control, and you want to see accounts receivables higher than the previous year. Okay. So those are not good things to see. Prepaid expenses are about the same. Property, plant. Fine. Accounts payable are double. Line of credit went from, these are in the millions, yeah. Line of credit went from 1.2 million almost to 20 million. Warrants are double. Warrant liabilities are double. Notes payable are triple almost. Yeah, this is not looking good, guys. For Tattooed Chef holders, this is not pretty. The one surprise I have is that they're not adding as many shares as I thought they would be adding here. So, let's just go over the 9 months, guys. Okay, 9 months they did 155 million. Right now they're at 179. Okay. Problem is, guys, cost of goods sold 139 and now it's at 180. They are paying more to sell their products, guys. They are paying more to sell their products. Like, that is, I don't even know, like, I can't even speak straight right now. I don't know how that works out to be a successful business. Operating expenses are almost doubled over the last 9 months. And loss from operations, guys, loss from operations last year were at 24.7 million, and now they're pushing $80 million. Okay. Loss from operations are at almost 25 million, and now are pushing almost 80 million. All right. This is the problem, guys. When you have a true competitive advantage, like those type of like operating expenses should get under control at some point in time. And the big knock I've had on Tattooed Chef is they have about 10 good products that should be just dominating those shelves alone, and they don't need an 80,000 square foot facility. They don't need all this hoopla. They don't need all this flash. Just be the best vegan pizza, or be the best plant-based pizza on the market, and maybe be like the best mac and cheese bowl on the market for cauliflower, and maybe like 2 or 3 other products, and just be good at that. Have a small facility and just grow your margins from there. They are taking on way too much, guys, way too much. Like cost of goods sold. How do you get to that? How do you get to this number? It makes absolutely no sense. Look, they're spending 50 million more on cost of goods sold, and they're only doing 20 more million in revenue. That is horrible management. When they bring it down to a net loss, it's 75 million versus 86 million. Basic diluted shares, they lost 93 cents last year. They're losing $1.05 so far in the trailing 9 months. What else do we notice? They put 1 million shares on the market, which actually 1,040,000 to be quite honest with you, which let's take a look at what the high of their stock price was. I'm curious to see what the high was over the last 9 months. There's a chance that they did it around $10. So that gives them 10, that's 10 million, roughly, probably right around 10 million that they got from diluting. Oh, actually the stock price is down, I think. The stock price is at 327. Guys, we might actually see $2 here. Okay, we might actually see $2 before the end of the night. If we don't see $2 by tonight, we're probably going to see it tomorrow morning. In the early morning, you get the initial sell-off of people that are just ready to just let go. I honestly don't know. I got to be honest, guys. I don't know what I would do if I was holding shares right now. Like, I think I would just let it go. I don't know. I don't. Leave a comment down below. What would you do if you own Tattoo? We got to finish out the report here. But what would you do if you own Tattooed Chef right now? Would you dump shares, or would you hold it and just hope that the company can do something right? Because the problem I'm seeing here is when are their margins going to be something? Like, I want to show you guys something. The food business is super, super dangerous, guys. The food business is super, super dangerous. And that's why you see companies like Campbell's Soup, Kellogg's, they've been around for 100 years. And they have channels of distribution, and they have like systems in place that took 100 years to build, and they can overcome a lot of this inflationary stuff because they are the kings in their industry. When you go to the cereal aisle, it's Kellogg's, guys. They don't have to pay for that space. The store is putting it there for them. When you go to the soup aisle, it's Campbell's Soup. They don't have to pay for that space. That's given to them. What is going on here? They're probably paying a lot of money to be on these shelves, or giving discounts to a point where it's completely killing the investor who bought in at $10, $16 and above, right? It's killing the investor that believed in the company, that believed in management, that believed in the story of vertical integration, that believed in their Italian farms and had the competitive advantage that they talked about, right? That's who it's hurting. It's not hurting the company. The company could give a crap. I mean, they obviously don't want to see their stock price go in the gutter, but short term, they don't care what you're feeling. They don't care if they dilute another 100 million shares out on the market. So when you look at profitability on these types of companies, guys, right? Gross profit of 6%. Well, we know that's not accurate anymore. But when you look at, like, when you're comparing Tattooed Chef to the biggest companies in the world that are pushing 20 to 30% profit margins, right? You have to bring down those gross margins. You have to bring them down to what net income will be. Okay? And these food companies' net incomes are in the 4 and 5%, which means, like, they have to do extremely high volume, right? Extremely high volume. And dude, this is not, I'm honest with you guys. Like, I don't know what I would do if you own the stock. Like, let me see some of the comments here. Yeah, he hurts himself by diluting, but you also have to understand that, well, I mean, we'll look through the financial statement. He pays himself a salary. So okay, adjusted EBITDA, guys. Oh boy, this is just getting uglier by the lines. Adjusted EBITDA is going from $16 million, negative $16 million in the trailing 9 months to negative $63 million in the trailing 9 months. And if you want to look at it over quarter, as we stated before, it is going from negative $5 million of adjusted EBITDA to negative $25 million of adjusted EBITDA. So get ready for diluting, guys. Why would they raise capital in a market where the interest rates are going to be so high and they have negative margins already? Answer me that question. Okay. Why would they raise capital? Why would they take out any sort of loans when they can't even be profitable? Like, how does that make any sense? When their cost of the goods sold is more than what they're making, the problem is nobody's going to friggin' lend them money. Nobody's going to lend them money. They're a liability. So the only way they're going to get capital is probably through share dilution. If you go into the bank and say, hey, listen, guys, I made $179 million this year and I need a $40 million loan. Okay, that's great. What did you make off of that? Well, I spent $180 million to basically lose about $63 million by the end of the year. Yeah, no worry. Let me write you a check for $40 million here and make sure you get through these hard times. Like, come on, guys. The only thing that surprises me is that they didn't dilute more. I apologize. They did dilute more. I apologize. They did dilute more. Okay. So they went from 81.9 million shares, let's round it up to 82, to 82.7. So, and when we go back from 9 months ago, it was at 81.4 to now 82.7, which is about 1.59. Is that right? No. 1.39. 1.39 million shares. So 1,390,000 shares in 9 months, which equates to, this isn't a 9-month period, guys. So that's, what is that? 139 divided by what? 81. 17% increase in shares. Is that right? It seems awfully high. That's not right. That's not right. It's like a 5% increase in shares. But anyway, you have to equate. So now what we have to do, I mean, if you guys want to see what this looks like on the chart here, we can do that. Hold on one second. Guys, I would appreciate it if you can smash the thumbs up too if you're finding any value in here. And if you're holding on to the stock, let me know what you're considering about doing. Are you holding? Are you holding if you own the stock? Does anybody in here hold the stock, or is anybody holding it? All right. So EBITDA margins are negative 3. Here's the problem, guys. Okay, I want to share this with you guys. All right. So here's the problem. The growth rate is completely out the friggin' window, right? Their 20% growth rate is out the window, right? I think we all can agree on that. Did they give us a forward guidance? Because what we have to figure out now is what their forward guidance is. Looking forward. That's not what I need. Net revenue decreased by almost 7%. I don't think they have any sort of forward guidance here. Does anybody know what they're projected to do in 2023? Anybody? Well, I appreciate you sharing that with us. I appreciate you sharing that with us. Does anybody know what they're going to do for revenue in 2024? They expect to be approximately $30 million by year end of 2023 and achieve positive EBITDA and cash flow by around mid 2024. This is just, I mean, if you hold the stock, I guess you have to hold it for 2024 and hope that they actually do say that they're going to get positive free cash flow by 2024. All right, I'm going to try to figure out here what the hell to do with this friggin' stock. All right, so revenue came down by 6%. I think it's realistic to say that they can do 15% revenue growth from years 1 through 3, 10% revenue growth from 3 through 6, and maybe like 9% revenue growth from 6 through 10. Okay. EBITDA margins are currently 0 to -3, so we're using -3. They believe they will be cash flow positive by mid 2024. Of which will be what, 30, was it 30 million free cash flow by 2024? I'm trying to see here. Give me 1 second, guys. I'll get to you here. Where is it? I mean, this is just, it's too much of a jungle mess to really make sense of. what do we got in here? 2.99 was hit. So they did hit the $2 range, which after reading this makes a lot of sense to me. I mean, I'm trying to find out where I just read it and I can't find it, but I want to see what they project to be free cash flow by mid 2024. All right. I'll just do a small free cash flow at that point. Revenue to free cash flow, I'm going to do 2% from years 3 through 6, and then 8% from years 6 through 10. They're definitely going to increase shares. By how many, I'm unsure of. I'm going to say we'll go with 6% share increase. Puts us at 86.2. All right, guys, this is basically what I'm getting in my model here. So, you know, basically, I got it at $1.20 roughly. Oh man, I mean, the problem is this, like, how much are they going to free cash flow? Are they going to be able to free cash flow? You know, like, you know, are they going to be able to? There's so many questions here. Unfortunately, they've just been disappointing shareholders since day one. Yeah, I mean, what do we got going in the chat here? CTR search. So, guys, what's your thoughts on the earnings here? Does anybody want me to go over anything? I own some, bought in a while back. Average price is 15, down considerably. Let's take a look at the chart really quick. Okay, it's at $2.86, guys, as we speak. It's at 281 right now. So, yeah, I mean, I did the best that I could, guys. I don't know. I mean, I guess if he's really interested in the stock still, he's going to be scooping up $2 shares. Now the question becomes, does he somehow turn this into a positive news? Does he turn this into some sort of positive news? That's the question I have. So, guys, I don't know what else to say. I mean, the only good thing you can kind of take from it is this. They're saying that they're going to somehow, they are saying somehow that they're going to go free cash flow by mid 2024. I mean, I don't see the runway to free cash flow by mid 2024. Guys, I got to be honest here. You have to be absolutely friggin' delusional to think that they're going to do free cash flow by mid 2024. They're losing $65 million. I mean, net losses for the 9 months are 86 million, guys. Net losses for the 9 months are 86 million. They're spending $180 million for costs of goods sold. Like, how do they get to cash flow positive from that point? I don't see how they would literally have to they would literally have to double. It's either one or two things. Either literally they would have to get their cost of goods sold down $100 million and grow top line, or they would have to double top line by 2024 and maintain cost of goods sold to get to free cash flow. Are any one of those things feasible right now when they just guided down and we could be heading into a recession in 2023? And I tend to believe that the last thing people are going to be buying is $5 side dishes of mac and cheese made out of cauliflower. Maybe I'm wrong. I don't know. Like, maybe I'm wrong on this, but I kind of knew. I forgot who it was who said, isn't most of this priced in? Well, guess what wasn't priced in? The margins weren't priced in. Okay? The negative 3%, the 0 to negative 3% margins, which are actually worse than that, wasn't priced in. The other thing that wasn't priced in is the additional shares that they put on the market. The other thing that wasn't priced in is the fact that they're dropping news that they're going to have to raise capital. So those three things alone is why the stock is trading down. If those three things did not come out, you probably trade sideways. I actually think if they had some sort of nugget that you can pull out of there that could have been positive, you probably would have been looking at an actual, like maybe a little bit of a pop in price. It jumped back up to 296 right now, but let's go through the comments really quick before I sign off here. I want to get your guys' opinion here, and make sure you guys smash the thumbs up, please. Appreciate it. We got 63 people in here. Help out the channel, cost you nothing. Just hit the thumbs up. Consider subscribing if you like this type of no BS analysis. It's really going to zero. Holy crap. Yeah, I mean, there's definitely a chance for it, in my opinion. Love your channel. Appreciate your analysis. Thank you so much. Remember that you don't have to make your money back the same way that you lost it. Much better prospect selling and put into Meta, for example. TTCF is going to zero, I promise. You know, I mean, listen, guys, I'm not saying it's going to zero, but I'm saying it's pretty darn ugly. And I would say that I'm going to tell you guys right now, if I were the business owner of Tattooed Chef right now, I would be raising a ton of capital, and I would probably be doubling or tripling the amount of outstanding shares on my company. There's only 82 million shares outstanding. I wouldn't be surprised if there's 200 million shares outstanding by next year. Okay. And I would put a ton of capital on my balance sheet. That would last me a few years. And I don't know what their strategy is. You know, we would have to listen to the earnings call. I have no friggin' clue how they think they're getting to positive cash flow here. I have no clue. I'm reading through the comments here, guys, before I let you guys go. I mean, I would listen. If you guys want to listen to the conference call, throw a thumbs up. I can try to log into the conference call if you all want. I think it's probably starting already. But yeah, I mean, Kid Freshie is kind of, you know, saying exactly what I thought. You know, I think they're going to have to do that. So we got one person that wants to Trumpet Race, wants to listen to the conference call. Guys, give me a thumbs up if you're interested in listening to the conference call. I will log into it. Actually, let's see if it's going off right now. And honestly, what's going to save their stock price tonight, guys, is going to be the conference call. So please do not be surprised if they somehow pull something out of their ace because it's that bad. Starts at 5 p.m. It's 4:53. So guys, completely up to you if you want the conference call. I'm going to turn down the volume. Let me see, make sure we can get enough volume in here. Should be okay. All right. All right, so at 5 o'clock, guys, they're going to do the conference call. Do we have people who want the conference call here? So we got Trumpet Race and Motorcycle Parts, thumbs up. Rebecca, thumbs up. Yeah, I think Kid Freshy is really making a good point. Okay, we got 3 people do the call. Kid Freshy wants to listen to the call. Guys, I'm going to tell you right now, if they're going to salvage this stock, it is going to be during the earnings call. 100%. 100% it's going to be during the earnings call. So I'm really curious to know what they can pull out of their butt to make the stock go back above $3. Here's the truth of it, guys. They need the stock price to go up. They need the stock price to go up, guys. Let's actually, while we're waiting for the conference call that doesn't start for another few minutes, let's take a look at the stock price. It's actually back above $3. I mean, I think $3 is going to be a pretty significant support for their company, right? I mean, guys, we have to remember this was a 16. Actually, what was the high of this stock? Was it 20 something? Dude, all right, this is ridiculous. I can't even believe this. This has to be in the talks of one of the worst performers this year. I mean, Voyager, whoever called Voyager, that was a good call out. Voyager might be the worst. All right, guys. This was a $28 stock. Let's just take a look at where the chart has gone since. Look at that. That is crazy. That is crazy. Holding $3, like holding on to $3 like nobody's business right now. Such a critical, you know what I'll do is when we do the earnings call, guys, I'll keep the chart on in the background for the earnings call because they need to salvage this price. They need to say something that's going to cause they need to say something that's going to cause the stock to reverse here because it's pretty clear. Let's pull up exactly what I'm talking about. Right here, guys. That blue highlighted, Tattooed Chef intends to raise additional debt or equity cap in the near future. They are not going to want to raise equity cap at a $3 price target. So they better say something in this conference call that gets the stock price somewhere reasonable over the next week or two. And the only other thing I can think of is the short interest in this stock. Let's see what the short interest in the stock is. Yeah. 28. Yeah, 28 in 2020. Yep. Well, Kid Freshy, I guess he's, I don't know, man. Like, here's what I've learned. I told you guys in the beginning that I thought Fubo was a legit company. And then I read the quarterly report and I didn't understand how they were getting to profitability. So I got out of the way and thank God I did. Yeah. Sometimes you have to just like swallow your ego and say, I made a bad investment. I'm getting out of the way. Right? Because management's job, guys, Management's job is to get investors excited, drive the stock price up, make people feel confident, make people feel warm and fuzzy. But they have no track record, right? They haven't executed on anything, guys. Like, let's go back to day one when they talked about the vertical integration, that they're going to get costs down. They haven't done any of that. They talked about their margins were going to be some of the most competitive margins in the space. -3%, -7% margins is not competitive. We just looked that up. And even if they had gross margins of 30% in the food business, that only comes down to about a net margin of 5 to 7% because of packaging costs and everything else. So it's just like, it's not the most efficient business to be in, right? I mean, yeah, so Kid Freshie, that's why I'm saying they're going to be raising capital. That's why I'm saying they literally came out in the statement and said they're going to be raising capital. So, you know, it's back down to $2.95 if anybody cares. We still got music in the background, but I mean, this thing could really take a huge hit tomorrow morning. So this is, I'm just going through the comments here, guys. Sash Child, we're below 299 right now. Actually, the low was 275, guys. The low was 275. You can see it behind me. That was the low today. So, who else? Dark Matter, I wouldn't touch it, honestly. There are plenty of plays out there that make sense. Yeah, I mean, like, Dark Matter makes a point. Like, right now, guys, I'm looking at a couple different companies here that, you know, have sold off significantly, that are really becoming interesting plays. I think somebody even brought up Meta in the chat here. And I think, you know, if you're going to take a risk, why not take a risk on a company like Meta, you know? Just some food for thought. But yeah, we're going to get to the conference call here in a minute. But anybody that just tuning in, smash that thumbs up. We basically went over Tattooed Chef's earnings, and it was pretty horrible, to say the least. They did mention that they're going to be cash flow positive mid to 2024. Not really sure on the path to profitability and the path to cash flow. When we looked over their numbers, doesn't really make sense how they get there. But I think right now they're willing to just say and do anything to possibly get to those points. You know, the more I'm thinking about it, guys, here's what I think they could do. I think they could say that they're getting rid of a bunch of their workforce, and that they're going to only focus on a select items, like select 15, 20 items. That would be an interesting turn of events for them, to basically just focus on their top sellers, right? Over the last couple years, they've been on many different types of shelves. They have an understanding of where their marketability is and where their demand is. Like, why not just focus on those sectors and just be the best in that one sector, right? Like, dude, guys, think about this. Would you rather be Tattooed Chef, have all these products and be burning capital, or would you rather be Jif and own and start in the peanut butter brand and own the peanut butter brand, and then sector out from there into many other brands? Once you've proven yourself, once you build a business that's cash flowing, that you can go to the bank and be like, hey, I got a very successful peanut butter business here. I'm on every shelf in America. The demand, I can't keep up with demand, but I want to venture out into maybe one or two other things. Tattooed Chef did this ass backwards, guys. They did it ass backwards. They had, 4 or 5 really good things, and they should have just stayed there. Because when you look at their financial statements, they weren't burning that much capital, guys. Like, when you look at their burn rate, if you go back when you first invested in Tattooed Chef, if you go back in some time, right? If you go back in time and look at Tattooed Chef, 2 years ago, when they were only burning like 24 million in 9 months, and they had plenty of cash on the balance sheet, and they were getting in more and more stores. That was an interesting story for me. I'm like, okay, like, they can own the frozen food department, right? They can own the frozen food department. And, well, not department, but they can own the frozen pizza. They can own the frozen cauliflower mac and cheese. And maybe they can own a couple other frozen sectors. And just be phenomenal at that. Just be phenomenal at that one thing. And then branch out from there, right? And that's not how they did it. They went way too big, way too fast. And unfortunately, I don't know if we're going to get volume loud enough in here.
It's important to note that this is a non-GAAP financial measure, and that the company believes it is a useful metric that better reflects the performance of its business on an ongoing
Guys, give me a thumbs up if you can hear it.
Reconciliation of this non-GAAP financial measure to its most directly comparable GAAP financial measure is included in today's press release, which again has been posted to the company's website. With that said, it is my pleasure to turn the call over to Tattooed Chef's President and Chief Executive Officer, Sam Galletti. Sam, please go ahead.
Thank you, Devin. And thanks to everyone for joining us today. When we became a publicly traded company in 2020, our mission was clear: drive growth and introduce the Tattooed Chef brand to more customers through diversifying our channel mix, and we did, as evidenced by a 3-year revenue CAGR of 29.7% as of Q3 in 2022, a presence at more than 18,000 locations as of September 30th, and more than tripling of our branded SKU count. Through the first 9 months of 2022, 100% of our growth was unit-driven, that is, without the benefit of any price increases. We also invested in expanding our manufacturing capacity 4 times to approximately 400,000 square feet since 2020, with the closing of our new manufacturing facility in New Mexico. We are also expanding outside the frozen aisle by introducing products that gain us entry into the refrigerated and ambient food spaces. We know consumers are still looking to introduce more better-for-you food options into their diet, and plant-based foods are an important movement to support this. We know, most importantly, they're looking to experience plant-based foods in a more convenient, economical, and creative way, and Tattooed Chef is in a strong position to support consumers' decision to make an impact on the world through what they eat by offering products in a variety of categories, such as pizza, entrees, handhelds, breakfast, and more. We love what we do, and we know we are making a difference.
How about making a difference in the stockholders' friggin' price? Make a difference there first.
40 years, and have seen economic recessions, bubbles, and historically low and high rates of inflation. We recognize the world has changed, and we are excited to lay in our plan to address this new reality and generate long-term value for our shareholders. A confluence of economic factors, specifically inflationary pressures, have driven our freight and logistic expenses to historic highs, while broader category headwinds and shifting consumer sentiment have caused us to expand how we operate our business. We will reduce our cash burn by zeroing out inefficient spending while emphasizing the allocation of resources to areas that elevate the inherent advantages of our vertically integrated operating model and deliver the most impactful and sustainable return on investment. As we have noted in our recent public announcements, we believe that the steps we are announcing today, in combination with ongoing expansions and efficiency initiatives, will serve to stabilize the business and redefine our operating characteristics. By year-end 2022, By year-end 2023, we believe that we can capture approximately $30 million of cost savings primarily through a combination of the following. A $15 million reduction in marketing-related expenses. In order to support our retail expansion over the last 2 years, we focused on building brand awareness through targeted advertising campaigns, which allowed us to increase our household awareness to 23% in less than 2 years. During this period, we have learned about our consumer, where they shop, what they value, and where they learn about Tattooed Chef brand. Our strategy moving forward will focus on more economical marketing tactics that are closer to the point of purchase to include retail-specific trade marketing programs, targeted social campaigns, and retailer-specific influencer campaigns. In 2023, every marketing dollar will be dedicated to driving trial and repeat purchases of the Tattooed Chef brand.
Anybody catch that? Influencer marketing campaigns? Did you guys catch that?
Primarily driven by a reduction in direct labor, manufacturing yield efficiencies, and increased productivity in our existing footprints. The first production line is delivering to our Paramount, California facility this week, and we are excited to see our planning begin to be implemented on our production floor. The first line that we are automating is one of the bowl lines that will double the capacity in the same footprint, utilizing less labor. Meanwhile, phase 2 is estimated to be completed by the end of May 2023. We believe we can implement these automation projects without slowing production output, and will see incremental efficiency gains throughout the coming quarters until the project is completed. Savings of approximately $2 million associated with our dedicated in-house cold storage facilities. Our year-to-date contracted cold storage spend in 2022 has been $6.7 million. A reduction in promotional programs, contra revenue, that are estimated to produce approximately $7 million in cost savings. As a new brand hitting the shelves over the last 2 years.
Hey, if Kim Kardashian starts promoting this, I'm probably gonna buy too. So I mean, anything she promotes usually blows up.
Ensure our success at the shelf while being in line on our frequency and depth of discount with the competing brands in our space. Over this period, we have learned a lot about the effectiveness of our promotional spend and required level of discounts to drive category-leading velocity. The insight we have gained will allow us to continue to support our retailers' commitment to the Tattooed Chef brand while driving efficiency in our trade spend. We are convinced that the opportunity for long-term sustainable growth is well within our reach. We are committed to the annual cost savings of approximately $30 million in 2023 and positive EBITDA and cash flow from operations by mid-year 2024. These are aggressive goals, and we will be accountable to ourselves and to our shareholders for achieving them. Thank you for your attention, and I'll now turn things over to Sarah to discuss our innovation and our marketing initiatives. Sarah?
I am excited about the future of Tattooed Chef. Healthy eating is no longer a fad. It's a way of life. On any given night, millions of plant-based intenders, the 113 million Americans who are looking to get more plant-based foods in their diet, are cooking with ready-made ingredients favoring Tattooed Chef options. My ethos for the Tattooed Chef brand was to create delicious, nostalgic...
Smash that thumbs up, guys.
...that delivers great nutrition without sacrificing flavor. Through our recent A&U study, we know that taste delicious is the most important attribute consumers are looking for when purchasing a better-for-you frozen product. And the study showed Tattooed Chef delivers on this claim more than many other competitive brands in our space. In fact, 86% of Tattooed Chef users rate the brand's taste and satisfaction in the top 20 boxes, compared with 59% for the broader better-for-you category. Further supported by our 57% best-in-class brand loyalty and customer retention, according to a MindSight study performed on September 9th of this year. Our products are created to satisfy every consumer's plant-based side and carry no judgment with respect to who you are, a vegan, a vegetarian, or a flexitarian, that person who just wants to incorporate plant-based meals into their regular diet. I'll now turn the conversation over to Stephanie for a discussion of our results. Stephanie? Good afternoon, everyone.
Can't wait to hear these results.
Decreased 6.7% to $54.1 million in the third quarter of 2022, from $58 million in the same period last year. Branded sales declined $10.3 million year over year, partially offset by private label and other revenue increases of 27.4%, or $6.4 million year over year, driven by revenue contributions from our acquisition of Belmont Confections and various New Mexico entities. The decline in branded sales was driven by a $15 million decline in a Tier 1 club and retail account and a $6.2 million increase in trade or contra revenue related expenses, which consisted of a $1.2 million increase in slotting fees as we focused on brand expansion of Tattooed Chef into additional retail stores across the country. Excluding the impact from this Tier 1 account and step-up in slotting fees, branded product sales in the third quarter of 2022 increased 17.1%, or $5.9 million from the prior year quarter. Private label and other revenue increases were driven by revenue contributions from our acquisition of Belmont Confections and various New Mexico entities. Tattooed Chef owns or leases approximately 400,000 square feet of manufacturing capacity, and we will continue to leverage this differentiated operating asset to grow revenue and fill plant capacity.
Somebody needs to ask these guys how they're going to raise capital. I'm so excited to hear that.
Has had a significant impact on our operating results in 2022, even more evident in the third quarter results. Cost increases were broad-based, spanning labor, freight, facility-related charges, energy costs, equipment, and supply-related expenses. With that said, in the third quarter of 2022, cost of goods sold rose 9.4% to $58 million, up from $53 million in the third quarter of 2021. As a reminder, freight and shipping costs are above the line on our P&L and directly impact our gross margin. We are focused and aware of these cost increases and controlling costs where possible. In addition, our first price increase of 10% on Tattooed Chef branded products took place at the end of September. Gross loss was $3.9 million in third quarter of 2022, compared to a gross profit of $5 million in the third quarter of 2021. The decline in profitability was driven by the above referenced broad-based inflationary pressures on cost of goods sold and inflated trade or contra revenue spend, as retail distribution points continue to grow, causing a near-term headwind to profitability. Freight and labor expenses increased to 34.1% of net revenue as compared to 24.9% in the prior year period. With the ongoing vertical integration initiative and continued brand...
If I hear vertical integration one more time since $28 a share, I'm going to friggin' throw up on my computer.
Operating expenses rose 146.8% to $31.6 million for the third quarter 2022 from $12.8 million in third quarter 2021, reflecting ongoing investments in the Tattooed Chef brand, sales channel expansion, and higher public company costs. The year-over-year increases were due primarily to a $7 million increase in stock-based compensation expense, a $4.6 million increase in marketing and promotional expenses, a $2.5 million increase in outside services, a $2 million increase in payroll expenses, and a $0.7 million increase in facility expenses. Net loss in the third quarter of 2022 was $38.5 million, or negative 46 cents per diluted share, as compared to a net loss of $8.2 million, or negative 10 cents per diluted share in third quarter 2021. Adjusted EBITDA loss was $25.5 million in the third quarter 2022, compared to adjusted EBITDA loss of $5.1 million in third quarter 2021. With respect to our balance sheet at September 30, 2022, cash was $14.2 million, debt on our line of credit was approximately $20 million, Net cash used in operating activities for the 3 months ended September 30, 2022, was $17.2 million. In the third quarter of 2022, non-cash expense add-backs were $12.9 million, while cash generated from working capital was $8.4 million as accounts payable. Accrued expenses and other current liabilities generated $14.7 million. Accounts receivable generated $7.9 million. Prepaid expenses and other assets generated $0.9 million, which was partially offset by cash consumed from inventory of $15 million. Capital expenditures during third quarter 2022 were $14.5 million and primarily reflected the purchase of new manufacturing and storage equipment in our new 80,000 square foot manufacturing facility in New Mexico and additional automation equipment related to our Paramount, California location. As covered above, the company accessed approximately $20 million on the $40 million UMB asset-based lending line to fund the asset purchase in New Mexico and other capital expenditures. As a reminder, the UMB line matures in September 2025. As covered above and in our press release last week, we have revised our 2020.
Yeah, Kid Freshy. I'll pull him up now. Good call.
We expect sales for the year to be $235 to $245 million and gross margins to be 0 to 3%. The modifications in consumer buying behavior in response to historically high inflation levels, the headwind from a Tier 1 club and retail account, higher trade or contra revenue from the change in technical accounting treatment related to the multi-vendor mailer at our Tier 1 club retailer, and a near-term step-up in slotting fees as retail distribution growth was stronger than originally anticipated at the start of 2022, all negatively impacted our revenue guidance and gross margin. As Sam noted, we are shifting our focus to profitability and lowering cash burn. We will continue to invest in the business to support strategic growth opportunities as well as cost-saving initiatives. With that in mind, marketing expenses are still expected to total $27 to $32 million for the year, and next year this will be reduced to $12 to $17 million. Our CapEx outlook remains at approximately $20 million for 2022, with the new Q3 acquisition of the New Mexico manufacturing facility accounting for approximately $11 million. Excluding the asset purchase, capital expenditures through the first 9 months of 2022 totaled $19.1 million. As noted in our press release, the company intends to raise additional debt for equity capital in the near future. I thank you for your attention, and I'll turn the conversation back to Sam.
Thanks, Stephanie. Let's open the call up for questions from our analysts.
Thank you. And at this time, we'll conduct our question and answer session. If you'd like to ask a question, press star 1 on your telephone keypad. A confirmation tone will indicate that your line is in the queue. You may press star 2 if you would like to remove your question from the queue. For participants using speaker equipment, it may be necessary to pick up your hand.
That's who's covering the stock. Kid Freshy. George Kelly.
Our first question comes from Cody Ross with UBS. Please state your question.
Good evening. Thank you for taking our questions. First question is headwinds in your Tier 1 account. Can you just provide a little more color on what was the nature of the weakness? Do you think this is one-time in nature, or is this something that should continue to persist through the fourth quarter into next year?
We think that it's going to push through partially into the fourth quarter. We expect some of those things to be removed in Q1 2023. We will release year-end or 2023 guidance when we do our year-end earnings call, but we are optimistic.
Oh yeah, I'm so optimistic.
As far as your decision to pivot to a focus on profits and cash flow generation, certainly appreciate that it's a rising interest rate environment. Can you just talk about your sales strategy and ability to grow sales at the rate that you historically have, if you will be pulling back on marketing expenses going forward?
Great question, guys. That's a great question.
Matt Williams, obviously was not part of the initial remarks. So our strategy is really focused on winning with the customers that we are doing business with today. We're obviously now a national brand. We have achieved varying levels of distribution with those retailers across the country, like Walmart and Target, Kroger for that matter. And so what we're really focused on is now that we know where the customer is learning about our products and how they engage with the brand, which is really at store level, we think that the investments we've made in marketing will, really kind of allow that kind of connection to the brand to continue. And so what we're very focused on is really optimizing our existing portfolio with our core customers. So as an example, we're in 1,800 stores with Target on two of our core SKUs, which is cauliflower mac and cheese bowl and burrito bowl, but we're only in 1,200 stores with our third ranked SKU and our fourth ranked SKU. So we believe there's an opportunity for growth by really
Smash that thumbs up, guys.
optimizing our core portfolio and leveraging the consumer connection and how we connect to the brand in that space by really optimizing our existing portfolio.
Okay, and then one last question, if I can sneak it in. You mentioned raising capital in the near future.
Woo!
Can you just talk about your preference, whether this be debt or equity, potential dilution, and how we should think about that going forward? And I'll pass it on. Thank you.
So I want to remind everyone that SAM is the largest shareholder in existence at the moment. We will always measure the potential dilution against the return that we expect to achieve with any new capital. We're going to give ourselves as much of a runway as we can through cost-saving initiatives, efficiency gains, and price increases. We're currently working actively on multiple financing tracks. We'll provide more clarity when we have more to share, but we are open to options at this moment in time, and we are gathering information.
That does not sound promising.
Thank you. And just a reminder, to ask a question, press star one. Our next question comes from George Kelly with Roth Capital. Please state your question.
Hey, everybody. Thanks for taking my questions. So first one, and I'm going back to just try to ask a similar question than that was just asked from the previous questioner. But I'm still a little unclear, so just wanted to ask again. The sales outlook change was about $40 million for this year. And I'm still just
It was actually 50
on exactly sort of the breakdown of what that's coming from. So if you could maybe say it one more time, just as far as this tier one customer, are they pulling your products, or is it really just about, consumer behavior has changed rapidly, unexpectedly? Or anything else you can provide just to give me some clarity on exactly what's going on.
We briefly mentioned it during the Q2 earnings call. Sam's Club does not have as many Tattooed Chef items or one-time promotion as they did in prior years. And we were aware of that. That's part of the loss that occurs within the revenue. Tattooed Chef brand did grow in size, even with that happening. But it was $15 million in revenue that occurred in 2021 that we did not see in 2022. And that was a planned thing that Sam's Club was planning on. One of the items was private label. A couple of the everyday items honestly just ran their course. They've been on shelves for multiple years, and it's what happened. But it's one of the
Guys, get ready. I actually have some good news for Tattooed Chef holders longer term.
Forward from that. But we are continuing to expand into retail chains and really diversify our customer portfolio so that we are not overly reliant on any one customer.
And George, this is Matt. If I could add, I mean, we really also did reset our business with Walmart. So with Walmart, we had SKUs in there that were not the most productive SKUs in our portfolio.
Oh, no shit. No shit. Unproductive SKUs. The biggest problem I have with this company.
Proposal to actually kind of reset the business in terms of going after kind of the core categories that are performing best for us, which is really primarily, the offering is now entree bowls. And so there was a little bit of a timing impact in terms of the lost sales of one reset that took place in one category, which was veg, and then the new reset that just took place, which is in the frozen new lifestyle set. And so, net, we gain stores, net, we gain SKUs. We know that the SKUs that we now have on shelf are going to be significantly more productive. But there was a slight timing, or there was a timing issue that led to this kind of gap in revenue that we will see cycle itself out as we move into 2023.
Okay, that's helpful. Thank you. And then second question on your liquidity. So could you walk through, I understand there's $14 million of cash.
These are good questions, guys.
The remaining amount, that $20 million on your credit facility, is that fully available? And then the third part of the question is, outside of that cash in that facility, and I understand you just mentioned the debt and equity raise, but I'm not talking about that. Are there any other sources of liquidity? Maybe it's inventory. Do you think you could draw down on inventory, or there's other asset sales you're considering? Just could you walk through that kind of near-term liquidity?
The price is falling, guys.
We have a great relationship with UMB. I want to make that abundantly clear. We have a great relationship with them. They formally invested in the company a few years ago and became an owner, and they have since brought down some of their ownership due to FDA rules and things of that nature, but they remain a great partner with us. As far as other places that we can generate cash from, inventory is absolutely high on our list. It's one of those things in which we are highly focused on. Our inventory values, we do expect to pull down in the coming quarters and be able to utilize that as part of our cash basis that adds to our liquidity. We are evaluating other means, like going through as we do automation and looking at equipment that is no longer functional for us, and whether that would go to another facility, or if we would actually go out and sell pieces of equipment that are no longer functional to the operation. Those are things that we look at. There's a lot of places that we have that we can pull from, and we're evaluating those every day.
Accounts receivable are down.
It's just about, if we go to early 2023 and some of these initiatives are more fully put in place, I guess I'm thinking of the automation. And you've taken pricing, and so that's fully played through. What is the kind of go-forward gross margin as you see it now? I know there's a lot of moving parts, but if you could just highlight...
Guys, these are phenomenal questions.
A go-forward that we should hit in kind of early, mid-2023, that would be helpful.
The only answer I can give you right now, George, is positive. Positive gross margin.
What the shit?
It's going to be the simplest answer. We'll provide guidance for 2023 with year-end earnings report, and possibly before then. Right now, we're busy running and making sure that all of our processes and our initiatives are running smoothly. And we really want to make sure that before we go out to the market and tell you and the world that everything is lining up the way that we want it to before we quote exact numbers.
Okay, thank you.
Thank you. There are no further questions at this time. I'll hand the floor back to management for closing remarks.
Thank you, everyone, for your participation today. We look forward to speaking with you all soon and keeping you apprised of
Smash the thumbs up, guys.
Have a great day.
So much to talk about here. So much to talk about. Oh boy. Okay, I did, as bad as this sounds, guys, I actually did pull something that I thought was fairly, you can construe as positive, okay? So let's oh boy, this is going to be ugly. Over the next few quarters, guys, it's pretty obvious that they're probably going to have to dilute, okay? I don't know if you guys caught on to that, but very limited to where they can get capital. And the stock price behind me, okay, went from almost $3 back down to $2.88 right now, okay? So it started selling off when they talked about liquidity problems, how to get capital, okay? And I'm pretty sure that this is probably going to get somewhat of a follow through here. Now, let me say some things here. They have yet to execute on anything, okay? So let's be honest with the company, and let's, whatever you guys want to talk about, let's be honest with the company. They have yet to execute on anything. Most likely they're going to have to dilute, right? I think that's pretty darn clear that they're going to have to dilute. How much are they going to dilute? Really hard to say how aggressive they're going to get here. the mistakes that I brought up in the beginning of this live stream, guys, is exactly what they said. They have too much stuff, right? They want to focus on fewer items. They want to sell. We're talking about selling parts, okay? Selling parts out of the facility because they need that much capital, and they've overspent, and they just went ape shit on all these products that nobody's buying. They have all this inventory. Now, the big knock is she's counting inventory as an asset, okay? When people are not buying your inventory, that's not an asset. The other thing was accounts receivable is not getting stronger. So that's a problem, first and foremost. So accounts receivable is not getting stronger. The cash position is atrocious. They have too much inventory that they're not moving. Now, what I did find interesting was that if they dilute, it might be an interesting speculation play if they're able to grow in the fourth quarter. I wouldn't touch this, guys. If you own it, you own it. I don't know what to tell you if you own the stock, okay? I don't know what to tell you if you would own the stock. But what I gathered was, and you can't trust this management. Here's the other problem. You can't trust this management because they have yet to execute on anything, right? That's kind of been the knock on them. They haven't executed at all. But what I want to show you guys is, and the stock's kind of just trading between 288 and 295, but let's go really quick before we sign off here. I want to show you guys something. Let me see. They basically said they're able to save $30 million in 2023, an additional on marketing, and an additional 12 to $17 million. Okay. So let's just say that's $40 million saved on the company. Okay. And just follow me here. So they can save $40 million next year on, guess that would be cost of goods sold. Whereas it's in news feeds. That's not what we want. Give me 1 second, guys. Okay. So let's go down and really quick. And I'm not saying to buy or sell this stock, guys. If you own the stock, I wouldn't know what to do. I'm being completely honest. I would probably just, I mean, you're talking about a $2 stock, the amount of assets that they own, honestly, with their market cap where they are, they could get bought out, guys. Like, I mean, I could see a company buying them out for multiple hundreds of thousands of square foot facilities. They have a brand. They have kind of everything in place to roll. Like, so I could kind of see a company picking them up like super cheap, especially if it gets in the $2 range. Like, there's companies that would probably buy them for $4 a share, you know, multiplied by what, 80, let's just call it by the time they dilute, let's just call it 100 million shares outstanding. Okay. $4 a share. So you're buying the company for $400 million. You have points of distribution, you have warehouses, you have employees, you kind of have everything rolling. So it kind of, there's some interesting stuff here. I'm not just going to crap on, I mean, they're in trouble. Like, there's no question that they're in trouble. But with that being said, I would say that if you look at it from a perspective of, you know, somebody could acquire them, that wants to get in the plant-based and realizes that they do have maybe some sort of brand recognition. I don't know who it would be, Kraft Mac and Cheese or somebody like that, like, you know, could possibly pick them up for $400 million, which is a drop in a bucket for a company like that, right? Like, you know, they would spend $1 billion on a company if it's a good investment, if they're able to grow margins and do everything that they think they can do. And they'll do their due diligence before they just buy them. But I'm just kind of spitballing here. But here's what's interesting is that they said that they can save $30 million by 2022 when it comes down to the marketing aspect. They mentioned that they're going to go heavier on the influencers. Guys, that drew a red flag to me you all know why. I think whoever was here earlier in the live stream, okay, we know why that draws a red flag. Quote unquote influencers, right? People that influence people to buy stocks, maybe, right? Sound familiar? I hate that word influencer because to me that's a little interesting that that's the route that they're willing to take when we had our own suspicions going into this call. So obviously dilution is going to be one thing. So I wouldn't touch this company until they get their balance sheet straight. Okay, first and foremost. The other thing I got upset about was she couldn't even give you an answer on what margins could possibly be in 2023, but yet they think they're going to be cash flow positive in 2024. How the hell does that make any sense? If you think you're going to be positive cash flow by mid 2024, you better know what your margins are going to be in the next year. Okay. Like that's so asinine that discredited her so much, because if I'm saying, hey guys, I'm going to be profitable in 2 years. Well, what are your margins? Well, I don't know. How are you going to be profitable if you don't know what your margins are going to be? Right? Like that was where I really thought she lost some discredit in the call, first and foremost. But let's just say this. Let's say that they're able to save the 30 million on cost of goods sold and an additional 12 to 17 million they think they're going to be able to save. So that's about $40 million, okay? $40 million that they think they're going to save. Their margins are probably going to be between 0 and 3% over the next 3 years. So that means by year 3 they better be pushing 3% margins and getting 1% cash flow. I don't even know how that math works out because she can't give you an answer. But anyway, make a long story short. So here we are in the trailing 9 months, okay? We got major problems here. I don't even know where to start, man. Like, first off, are they going to be able to grow? Like, did they just hit the wall of growth? Like, because we know in business, to go from 500 million to go from 50 million in revenue to 100 million in revenue is impressive. Then from going from 100 million revenue to 200 million is impressive. But then going from 200 million to $500 million in revenue is extremely, extremely hard. Okay, so that next step that they need to take, I don't know if they can take that step. Okay, like that's first and foremost, because the economy hasn't been that bad overall, right? Like we are in some sort of recession, but we're not in a full-blown recession here where people are penny pinching and like worrying about, people are traveling right now. People are racking up credit cards. So Tattooed Chef should be still growing in this environment, in my opinion. And the fact that they're not is absolutely concerning, okay? So I'm going to say this. What if they can grow, what if they can grow basically 4 or 5% over the next year? Okay, like I'm being realistic. I'm not going to be surprised if their revenue is like below 10% after this call, and the fact that they had problems growing in this market when everybody and their moms taking trips all over the world, and you would think that the frozen food aspect of business would be fairly strong. But I will say this, Tyson reported and it was a little disappointing, but their 2023 guidance was very strong. So I don't know, I guess it's hit or miss for everybody. But okay, so they got 180 million of cost of goods sold, right? So basically 180 million of cost of goods sold, and they think they're going to get it down. They think they can cut, just call it 40 million for even numbers. That puts them at 140 million of cost of goods sold. Okay, 140 million of cost of goods sold, and let's just say that they can grow top line a few percentage points. Well, when we bring that down, their net losses are still going to be negative, guys. Like, because if we add back in positive 40, right? If we add back in the positive $40 million if we add back in the positive $40 million that they think they think they can recapture in 2023, and that they're going to use influencers and they're going to stick to certain aspects of their business where the ROI is a little bit better, and they're going to sell their parts of their warehouse. Who knows? Maybe Sam Galetti's going to sell his car, his house, and just like cash out and, sell it. I mean, he might have to sell his daughter at this point. I don't know what the hell is going to go on with the company, but like, you're still at negative operating margins, guys. Like, you're still at negative operating margins, even with that 40 million that they think they can recapture. So they would have to grow. They would essentially have to grow, what is it, 40%? Call it 35. So they would have to grow roughly 33% top line revenue. So they would have to do two things here. They would have to grow 33% top line revenue and get that 40 million cost down in order to break even. Okay, so just simple math here. I'm not going to get too deep into the numbers here, but they basically need to minus out the 40 million that they said they can recapture in 2023. Let's say they can do that. Okay, they haven't executed anything, but let's just say they do it. They save $40 million. Okay, they still have to grow revenue by 30+% to break even, in my opinion. All right, what is the problem with all that? Well, if they're spending 40 million less on cost of goods sold and advertisement and all that kind of stuff, how are they still going to grow their top line over 30% when this quarter they overspent and underperformed? Right? Does that make sense? Give me a thumbs up if I'm making sense to anybody here. I'm kind of just giving you guys the best case scenario that I could possibly see coming out of this earnings call. So the best case scenario I can see out of this earnings call is they grow top line by over 30%. They save 40% on expenses. That puts them at break even. That puts them at break even, in my opinion. So I don't know, man. I don't see how they do it, but at this point in time, guys, I would say, if you own it, you own it. Kind of just ride the ship out with Jeremy, see what he says. Actually, we all should go on Jeremy's page when he goes up and comment to see what he's going to do with Tattooed Share Chefs. Or let's go to Jeremy's page right now and see what he's doing. Hold on one second. I want to see if Jeremy is making moves in Tattooed Chef, or he's made a video on Tattooed Chef here. Hold on one second. Let me pull it up. And guys, if you have any questions or comments or anything you got from the phone call, obviously leave them in there. I'm curious to get your opinion. Anybody that's holding, let me know what you're thinking as well. See. It doesn't look like he's released a video quite yet on Tattooed Chef. I'm on his page right now. Because, like, honestly, maybe he's seeing something I'm not seeing. Like, maybe there is something good here. Does he go live at all? Does anybody know if he goes live? He hasn't been live in a year, so he doesn't go live. So I would like to get his opinion on it. I mean, I don't know how you turn this into anything good. I mean, other than the fact that they could be break even if they can grow 30% and cut 40 million out of their if they can grow top line revenue at 30+% and cut 40 million out of their expenses, then they have a shot at being break even, guys. Break even. And I guess that would make sense if they can be break even by 2023, that they can actually maybe cash flow by 2024. So I don't know. I don't know, you guys. Anybody else want to talk about anything else? We got 94 people up in here. Smash that thumbs up. We got 95 people in here. Smash that thumbs up. You all better start subscribing to my channel here. I work my ass off to make sure you guys are on the right side of your trade. I'm not always right, but at least I have a process. I can figure out what a stock is worth. And guys, let's plug in Tattooed Chef's numbers and see what we should be paying for the stock. Off of this conference call, I got a better idea of what we should be paying for the stock. All right. First up to bat, I'm going to put -1 margins in for the next 3 years because they said 0 to, actually, I'll give them 1%. I'll be nice. I'll give them 1% margins, okay? So we'll give them 1% margins. We'll take the negative out of there. We'll give them 1% margins. Okay, 1% margins for Tattooed Chef, all right? 4 years, 1 through 3. Now, mind you guys, she said 0 to 3% margins. Okay, 0 to 3%. I'm giving them 1. I'll give them 1.5. How about that? We'll meet him in the middle at 1.5. So 1.5% margins. She couldn't give the caller from Roth Capital, I think it was. She couldn't give the caller from Roth Capital what her margins are going to be in 2023, but she said they're going to be cash flow positive in 2024. How do you have a job, lady? How do you have a job? If you can sit here and tell me that you're going to be cash flow positive in 2024, you better know what your margins are going to be next year because that's only a few months away. They also said they're raising their costs by 10%, which means now a $4.99 bowl is going to be roughly a $4.50 bowl, okay? So, I mean, I can do math, I promise. That means a $4.99 bowl is going to be a $5.50 bowl. Is that going to impact their growth rates? Probably, guys. So I'll keep it at 15 because this was a company that was growing over 20, and we'll give them a bad quarter and say that they can still grow double digits, even though I really don't know how they arrived there. I really don't. I mean, they're going to be set. Maybe they're going to be start counting what they're selling out of their warehouse, like parts out of their warehouse. They're going to count as a, you know, return on capital or revenue, and then it'll work out. It'll work itself out somehow. Two negative things we saw on the balance sheet was way too much inventory and not enough accounts receivable. Those were two negatives that I saw, right? What do you guys think the growth rate's going to be from years 3 through 6? Yeah, exactly. Kid Freshie, he's saying they said they were going to be cash flow positive by the end of this year. That was like 2 years ago, I think it was. So good call out on that. So they said mid 2024 they're going to be positive cash flow, and they don't know what their margins are going to be in 2020. Guys, I don't know how the stock. Let me look at the stock really quick. I don't know how the stock is actually holding up. It's at $2.90. It's at $2.90 right now. I'm kind of curious to how that's holding up when they don't even know what their margins are going to be next year. That's probably the worst thing you could possibly say is, I don't know where my margins are going to be. Oh, really? How do you run a business if you don't know what your margins are? I've never heard of such a thing. But I guess Tattooed Chef runs a business where they don't know where their margins are going to be. All right, so here's what we're doing. I got them growing years 1 through 3. I got them growing 15%. Okay, probably too high, but we'll give it to them. Margins are going to be 2. It says 2. It's going to be 1.5. Okay, years 3 through 6. Who the hell knows? But they said they're going to be cash flowing. So let's give them the benefit of a doubt, right? Margins will be 4%, cash flow 1%. Then year 6, is anybody chiming in here for growth rates? Anybody chiming in here for growth rates? All right. I'm just looking through the comments, guys. 10 to 15%. Yeah, that's what I got them at. I got them growing 10% years 3 through 6, 4% margins. Am I being too mean? Like, she doesn't know what margins are going to be, so I'm just going to use 4. If she would have known what margins would have been, we could be a little bit more accurate here. And then we'll go from years 6 through 10. We'll give them 8% margins, free cash flow of 5%, 4%, 4%. Yeah. I don't know, guys. I'm not getting anything good here. We'll go 11 and 10. Okay. I don't know, guys. This is where I'm at right now. I mean, if she could have gave us some clarity here, yeah, I don't know, guys. I got them. So just to give you all a heads up, how I arrived at this number is, hold on one second. I'm just going to give you guys a quick breeze through and then we'll sign off here. And before I sign off, you know what to do, guys. Don't make me beg, okay? Don't make me beg for those thumbs up, you bastards. All right. So here's what I got, guys. If they consistently dilute between 5 and 6%, which is basically what they're going to have to do over the next few years, in my opinion. I'm counting that, okay? I'm counting them diluting us 5 to 6% year over year, which is about what they've been doing, okay? It's not an astronomical number. I tend to believe that there's going to be a huge dump coming soon, so I probably should be baking in more than that, but I'm trying to be nice here. Maybe they have outside financing somewhere. Probably not. I just don't know who would finance them. Like, who's going to finance a business where they do 179 million in revenue, burn 180 million, and they bring it down to top line and lose 60 million? Like, I don't know many people that are going to lend out to that, right? I mean, unless if they lend out with collateralized loans on their facilities, you know. I mean, that's the one thing they do on the facilities. So maybe they pull equity. I don't know. I guess they could find ways of financing, guys. They might not be completely dead. They might be able to find ways of financing, because I think everything they did, they paid for cash. And I question that move in itself, but whatever. I want to make sure I'm giving a fair EV to EBITDA. So let's go to valuation really quick. Make sure I'm being fair on the EV to EBITDA, which I'm pretty sure I am. Let's see we got to make sure we understand who the peers are. I mean, none of these guys are really peers. Really good food company, maybe that's a peer. I mean, you're getting I don't trust this. I got a 6.5 EV to EBITDA. Maybe I can bump it up to an 8. I don't feel comfortable doing anything more than that. I mean, I don't feel any more I don't feel any more comfortable bumping up an EV to EBITDA above 8 on this company. Okay. Because when you think about who the comparisons are almost impossible. Like, who do you compare them to? Like Campbell's? I mean, do you compare them to Campbell's Soup? Like, EV to EBITDA of 12? I mean, you can't compare them to Kellogg's. I'm trying to think, like, who else? Kraft would be probably a good one. EV to EBITDA of 11. I don't know, guys. Maybe a 9 at the highest. I mean, that's it. I'm at $1.68, guys. I'm at $1.50, $1.68. I mean, I mean, that's where I'm at with this stock. It's at $2.90. I mean, if it got down to $1.50, like if it got down to $1.50, they were done diluting. We saw some pop. I mean, here's the thing, guys. You like anybody that might be interested in buying the stock, like, why not just wait? Like, why not wait? And so it goes from $2 to $4 or $5. Okay. But at least it didn't go to zero, right? So like, why not wait and make sure that they get the diluting out of the way, they build up their balance sheet, and that they actually get those costs under control of the total cost that they can, the total cut cost of about 40 million, and they raise prices of 10%. And when they raise prices at 10%, are their products going to sell as fast? The answer is probably no. Their growth rate is probably going to slow down, guys. So this is like in a sticky spot. Yeah, 168 sold 200x according to Jeremy. Yeah, actually, if Jeremy gets it at like 150 to 168, you know, what is it, guys? It's about a $40 stock. So yeah, I mean that's a good return, guys. You buy it today at $1. Why? You know what? Why even wait? I might just start pulling the trigger now on some Tattooed Chef, right? Like, here's the funny thing. They are actually trading cheaper than it cost to buy one of their bulls. Right? Think about that. It's a deal. You know it's a deal. All right, guys, I'm probably going to sign off here. Appreciate a thumbs up. If anybody has any questions, I'll definitely hit it up right now. So make sure you like and subscribe if you haven't already. I am so excited to see what Jeremy says. I'm so excited to see what Jeremy says because I really want to see how he interprets this. Now listen, guys, whether you like me or not, right? Some people here might not like me. I know I got a couple trolls. That's fine. It's okay. It's okay. I appreciate the trolls too because I'm not perfect. I make mistakes. And you know what? I want to thank the trolls before I let you guys go because the trolls make me work harder to make better content. So thank you, trolls. I work harder to make better content, and I think my content has gotten better over the last year. Maybe not. Maybe I'm just being biased. But I will say this. I at least have the guts to come on here and go over the numbers live and give you my opinion on every line item that the company had and tell you what my thoughts are. Are they always going to be right? No. But I don't wait for the stock to react. I don't wait for the company to do earnings call. I come on here and I go over the numbers live with you because I want to make sure that you guys don't get duped into watching YouTubers who pump up bad earnings. And I can think so many examples of YouTubers who have pumped recently bad earnings. Okay, not going to get into it. I'm sure you guys can use your imagination, but there's been some horrible earnings recently, and yet these YouTubers come out and talk about how great the company is, right? These earnings, I'm just going to leave it at that. The earnings were bad. The earnings were bad. Is there hope? There's a dwindle of hope in this company, but I wouldn't touch it until they finish diluting, and everything that they stated in this earnings call, better make sure that they start executing before you buy. If they can execute exactly what they said, and they can grow top line by 30% and cut 40% of expenses, and they're done diluting and the balance sheet looks good, could be interesting. Now, with that being said, I think they could get acquired. I think they can get acquired. He posted? Did somebody say he posted? All right. All right, guys. All right. You want me to go react? Give me a thumbs up if you want me to go react to this trash. Let's go take a look at. Somebody said he posted. Well, holy smokers. Holy smokers. Tattooed Chef just reported earnings, and it was a bad quarter. But guys, the future looks bright. I don't want to make fun of people. I don't want to make fun of people. Somebody said that he posted. I'm not seeing it. Are you guys sure he posted? Oh, he posted. He posted. Ah, he posted. All right. Let's get into it. Guys, can I say something without being, I don't want to sound arrogant here, okay? I don't want to sound arrogant. Okay? He has, in 4 minutes, he has 550 views, which is probably what I have on this live stream over the last hour, over the last 2 hours that I did a live stream. Went over all the numbers with you, went over the charts, went over everything. I only get 500 views. This guy farts. In 4 minutes, he gets 500 views. It makes me sick, guys. It makes me sick. I don't hate him, by the way. I don't want anybody thinking I hate this guy, okay? I don't hate him. Maybe I'm just jealous. Is it a jealousy thing, or is it more like I'm frustrated because I work so friggin' hard to make sure that you guys don't get screwed and give you the best opinion that I possibly can? Am I going to be right all the time? Probably not. Going to be wrong more than I'm right. Maybe. I don't know. It's close. All right, guys.
I'll have a big video coming out later tonight on the markets and all the other stocks out there. This video is for Sam Galletti, the CEO of Tattooed Chef, and for the management team over at Tattooed Chef. Embarrassed. I am embarrassed to be a shareholder of this company. You guys have really outdone yourselves.
Let's just start out with this. Why are you still a shareholder of this company? Why are you still a shareholder of this company? Now, guys, I understand people in the... listen, if you own the company and you work a 9 to 5 and you believed in the company, you don't have the time to read the quarterly reports. You don't have the time to read every friggin' news article that comes out. And that's why this is a dangerous game, especially with these high speculation type stocks. But for an expert investor like Jeremy and somebody who knows nothing like myself, gut out at $16 a share because the margins didn't make sense, because they were doing shady stuff with their shares, and because I did not have faith in the way they were handling their balance sheet. Straight up, guys, you can go back and watch my videos. Right off the rip, I call them out on the balance sheet. So my first question is, why do you still own the friggin' stock if you're a stock expert? Moving on.
Because if we were to literally go through all the different stocks I have money in, all my different stocks, y'all are the only one that I can genuinely say I'm embarrassed to be a shareholder. Not disappointed, embarrassed. And there's a major...
Hold on a second. Embarrassed about Tattooed Chef? What about Voyager? What about Honest Company? What about those companies? Like, are you not embarrassed about those companies either? What about pushing FTX on people? Are you not embarrassed about that? Listen, you can pick a bad stock, but like, you also shield garbage companies on your viewers, right? I didn't want my channel to turn into this. You guys asked for it. I'm giving it to you. So, not his worst well, probably his. I don't even know. He's got there's a lot to uncover here. Let's just keep going.
Difference. The numbers this entire year have been horrible and awful. Almost seem like that's not a good enough term. It's embarrassing. This past quarter was the cherry on top of just what are y'all doing? Are you even running a business? Like I'm trying to figure this out. Like what's going on? I'm like, the product's great. The one person I have no hate for, the one person who's got their stuff together at that team is Sarah Galletti. That's the one person, okay? And the product's great. I eat these all the time. But I'm looking at this and I'm like, wait, so there's sweet potatoes in it, there's some chickpeas, some rice cauliflower, and a little sauce. And these sell for $5 at the store, so maybe you're selling them to the retailer for $2.50, $3, $3.50. And
wrong answer, Jeremy. You better be reading the financial reports. They are actually losing money selling the products. So they are probably selling it at $4, and the margins are so razor thin. That's why they're raising their prices 10%. So obviously he has not read the quarterly report, because the margins are so thin that the company had done $179 million in revenue and spent $180 in cost of goods sold. So therefore, the margins are non-existent. And if you would have been reading the quarterly reports over the last 2 years, you would have realized this. And so I'm so confused to how you are giving financial advice to people when this was so clear about a year ago. Moving on.
And y'all losing money from this? What?
Yeah, they're losing money, Jeremy. They're losing money.
It's a tortilla with a little cheese on top, some sauce, some rice, some black beans. It's delicious. And they sell it at the store for $5. How do y'all lose money on this? Sam.
I can tell you how they lost money on it. Let's go over this. $7 million of stock-based compensation. Margins are 0 to 3%. What else? Expanding beyond their means. And now they have to possibly sell and downsize. And they have to dilute because they have no money on their balance sheet, because they decided to create. He's making the point of why they're failing, guys. They decided to create so many products in a short period of time with 0% margins. Let me repeat that. 0% margins, and that's probably the high end. The actual margins are probably negative when you factor in what freight costs have gone up and fuel costs have gone up and all that. So they're actually negative. So yes, Jeremy, they need to be selling for more, and that's why they're raising their prices by 10% and cutting their advertising by $40 million, because there's no margin in their business.
You came from supposedly running profitable businesses in the food space.
That's not true.
We need to see some
major
improvements here.
That is not a true statement. The company hasn't been profitable, guys. The company has not been profitable, so that's a lie. And here's where I'm getting upset, ladies and gentlemen. Whose fault is it? Why is it Tattooed Chef's fault? They give you the quarterly report. They told you that they literally just said that they might be dumping shares on people. So when they dump shares, are you going to be upset that they're dumping shares on you? Right? Are you going to be upset? They literally said they might be dumping shares on you. So when the stock goes from $3.50 because all of a sudden it starts rallying back, and then all of a sudden shoots back down to $1.50, are you going to be surprised? Probably not, because if you read what's going on, they're telling you everything. It's not Tattooed Chef's fault. It's your fault. It's your fault, Jeremy. You decided to keep buying the dip on a company that had no margins.
You got till Q3 of 2023. If I don't see margins,
They got Q3 of 2023. They're going to dilute on Jeremy by then, in my opinion. Now, I could be wrong. Maybe they find some sort of some bank that's willing to lend to them at hemorrhaging $60 million a year. That there's a possibility of that. So, I guess we'll see.
Cash flow and profitability get in a epically better place than where they're at right now, I will leave the stock. I will take my massive L and cry all the way to the sewer, okay? Because this...
So here's a guy who bought a stock $16, $17, and I'm not recommending buying or selling this stock, guys. I'm not recommending that, right? If you didn't buy, I'm saying wait for them to dilute, see if they clean up their balance sheet, and see if they can get margins by 2023. Because from what they said on the friggin' phone call, they have no clue what their margins are going to be in 2023. Not only do they not know what their margins are going to be in 2023, but they're going to probably dilute you on top of that. So, Jeremy, get ready for that. Get ready for unexpected, probably negative to zero margins, and get ready for maybe, I don't know, 40 to 50 million share dump or offering. That's about what I would be expecting. Probably more than that. If the price goes up, maybe it will be 40 or 50 million. But because the price is so depressed, probably needs to be a lot of more shares on the market. Now, here's the problem. At this point in time, like, they have a legit business and could possibly get bought out. Like, I mean, they're on shelves. If they can fix their margins, like, why would you sell at $1.90 when you could have sold at $14 or $15 when the writing was on the wall? Like, I don't understand that, right? I don't understand that.
Is embarrassing. I thought the most embarrassing thing that from a Sam was going to be last week, but this is almost up there, Sam. Okay, unbelievable. Third quarter of 2023, if we don't see massive improvements, I'm gone. And I can speak on probably behalf of all TTCF shareholders, because I don't think there's one TTCF shareholder that's happy in this situation. We're all embarrassed, and
they all can thank you for pumping out this stock. And I'm going to tell you guys the truth. This is me coming clean 100%. I started YouTube a year ago, or maybe a little over a year ago. And guess what was the first guy that popped up on my YouTube feed when I wanted to like talk about finances because I wanted to get out of being in financial services and maybe make a YouTube channel? It's Jeremy. Jeremy was the first guy that I actually started watching. And I was like, you know what? He makes some sense here. He's charismatic. He's entertaining. And then I started listening to the stocks he was picking. And I started looking at the quarterly reports myself. And I'm like, well, this guy's so successful. Maybe I should listen to him. And I bought Tattooed Chef. And I sold Tattooed Chef after the first, I held it for a quarter. And I sold it after, like, I forgot what quarter it was. It was atrocious earnings, okay? The stock went from 17 to 13. I held it and sold it like at 16, okay? It rebounded back. And I learned such a valuable lesson from that. You cannot look at these people on YouTube, including myself, guys. Like, I could help you. I could guide you. I can show you how I break down a stock. It's not always going to be right. There's a lot of things that are subjective about looking at a stock. I might have an emotional attachment to a company because I think they're going to do something great. And unfortunately, that has nothing to do with fundamentals, right? Jeremy stated in this video that the company has good food. I agree with him. They have no fundamentals. Actually, the fundamentals are friggin' negative, right? Because they're burning capital and they have to raise capital at this point.
every number, everything you said you're going to do over this past year, you haven't done it. Everything's been worse.
It's been years they've been doing that.
Oh, this went better for the company. No, like literally every single thing went worse. Embarrassing quarter. Much love as always. Appreciate everybody joining me. Woo-wee.
Woo-wee. 783 views in 5 minutes. That's it, folks. So on that note, I'm signing off here. Hopefully everybody enjoyed that. I don't like making fun of people. I didn't want my channel to be about that, but you guys asked for it and I'm going to give it to you as I see it. Some of you may agree with me, some of you may not, but really appreciate everybody. If anybody has any questions, leave them in the chat. Yeah, Kid Freshie, I bought Tattooed Chef when they actually had a trajectory of being positive cash flow, man. Like, they actually had a vision of profitability and they only had like 25 or 30 items. And I thought most of them were good quality. So therefore I saw a path to profitability. Then all of a sudden they reported earnings and the vertical integration BS that they talked about was not coming through. We started hitting inflation and I was like, I'm getting the heck out of here. Margins are going to be a problem. And so I sold. And so guys, that's how my relationship ended with Tattooed Chef. And I will say this, I still buy their white pizza because it's unbelievable. Their white pizza is unbelievable. So I still like some of their products and I'll still buy it. But fundamentally, the company has a long way to go and it's going to be painful. So as always, guys, appreciate your time. Thank you so much for spending your day with me. Really appreciate it. I'm glad we got a good showing and hopefully everybody enjoyed that. Make sure you like and subscribe and we will see you next time, investors. Peace.